Let's get into the specifics. The government is providing $2,600 payments to you, and some of you will receive an additional $200 on top of that. These payments are essentially a small present from the government intended to make your life a little bit simpler. This additional money is intended to help alleviate some of your financial burden if you've been finding it difficult to pay your bills, buy groceries, or afford other necessities. However, if you currently get benefits from the VA, SSI, or Social Security, you may not be eligible for these payments. You're fortunate. These payments are intended to provide you with a little additional assistance when you need it most. However, how can you ensure that you receive the $2,600 plus the additional $200? Don't worry, we'll guide you through every step of the process. It is really encouraging to see the government stepping up to support people like you who may be going through difficult circumstances, whether it be with rent assistance, paying for medical expenditures, or just providing you with a small breathing room. This way, you won't miss out on a single fragrance. Are here to brighten people's lives a little bit. Let's start with the basics. What are the $2,600 and $200 payments? They are the result of the government's attempts to help millions of Americans who are struggling to make ends meet due to rising living expenses and high inflation. The $2,600 payment is effectively an update and renewal of the stimulus checks that were sent out to stimulate the economy during the COVID-19 pandemic. However, this time, the payments are intended exclusively for beneficiaries of VA, SSI, and Social Security benefits. The reasoning is because they-income households have been particularly hard hit by rising costs for housing, food, utilities, and other necessities, because for the most part, their modest cost of living adjustments haven't kept up with the rapid acceleration of inflation. As a result, this $2,600 inflation relief payment is intended to help tens of thousands of households, millions of financially disadvantaged Americans to catch up and reclaim some financial breathing room. But that's not all. In addition to the $2,600 that was approved as part of the same legislation, there is an additional $200 add-on payment. The idea behind this additional funding is twofold. First, it acts as a little bonus payment to offset the ongoing high inflation and an advance payment toward what is anticipated to be a significant cost of living adjustment or COLA increase for 2024. Secondly, it serves as a small bonus payment to make up for the decline in purchasing power that Social Security and related benefits recipients have suffered over. Let's break it down for the $2,600 payment. In the last 18 months, particularly now for the million-dollar question, you must be currently receiving benefits from one of the following organizations in order to be eligible for these generous payouts. Federal initiatives. Retirement benefits from Social Security disability insurance through Social Security. SSDI extra security earnings, Social Security or Veterans Administration, disability benefits or pensions. First and foremost, your eligibility is determined by your membership status as of March 2023. If you started receiving benefits after that K-off date, however, you will not be eligible. You will still be eligible for any future stimulus-style payments that may be approved later on, provided that both you and your spouse meet the requirements for married couples receiving benefits. Each spouse will qualify for their own maximum benefit on this current $2,600 payment. Payment of $2,600 and third, eligibility is automatically granted for those who are currently beneficiaries of any of those qualifying programs. There are no income restrictions or personal asset tests to pass. The requirements for the additional $200 add-on payment are the same as those for the $2,600 payment. Therefore, it will be applicable to the same large group of beneficiaries receiving VA, Social Security, SSDI, or SSI payments without any additional requirements. The sole distinction is that individuals with higher incomes who had some of their Social Security income taxed last year will only get $150 of the $200 payment instead of the entire amount. However, the majority of receivers will receive the full $200. Furthermore, the $200 will be distributed to all beneficiaries, including those who started receiving benefits after March 2023, regardless of when they started receiving payments. All right, now that we've covered individuals who meet the requirements, let's talk about scheduling. Based on the most recent guidance, the intention is to start delivering payments in two parts, commencing in early June 2023 for the $2,600 payment specifically. This is how the rollout will occur. So, when can you actually expect to see this money enter your accounts? All individual Social Security recipients, including retirees and those on disability, will get the first wave of payments, which are scheduled to arrive during the week of June 5th. If you receive regular Social Security, keep a lookout for the second round of payments in early June and mid-June. Supplemental Security Income (SSI) beneficiaries will begin receiving a batch of $2,600 payments. The process should be finished by the end of that month. Shortly after, in July, Veterans Affairs benefit recipients who are receiving pension or disability payments will begin receiving their $2,600 payments. Additionally, the delivery timing for the additional $200 element is still unknown, but is anticipated to be slightly staggered from the $2,600 payments. As of right now, Social Security claimants will likely receive the $200 add-on payments first, maybe as early as late July. Payments to SSI, SSDI, and VA beneficiaries would then come in the ensuing weeks. The multi-phase rollout is a little complicated because of the various payment systems involved, but in the end, all payments, the $600 and $200 portions in particular, should be made to the payments themselves are scheduled to be made in the same manner that you normally receive your monthly benefit, which is either direct deposit into your bank account via mailed check or direct express card if that's how you receive it. All qualifying recipients by the end of September at the latest, you receive payment. As a short aside, unlike certain stimulus scams we've seen in the past, these payments are entirely valid and free. You won't need to submit any special documents or pay any fees. The money will find its way to you on its own. Going beyond simply in addition to knowing the essentials of who is eligible and when payments are made, it is critical to comprehend the tax ramifications of these sizable lump sums. The last thing anyone wants is to get an unexpected tax bill from the IRS the following year. Fortunately, these payments, the additional $200 and the $100 from 2006, are fully tax-free at the federal level and will not be deducted from taxable income relief. However, that's not the whole story. Depending on your state of residence and its specific tax laws, you may still be subject to some tax exposure. Policies that you perceive clearly. While many states classify these contributions as taxable income and may raise the amount you owe on your state taxes, several states just follow the federal government's example and won't tax these payments. We are positive that the following states will tax these payments as income: Colorado, Connecticut, Kansas, Minnesota, Nebraska, URI. In the meantime, a number of other states have not yet made a decision or have not directly addressed the tax status of these payments, so if you live in one of such areas, you should keep a careful eye on the situation or consult with a nearby tax expert. The distinction between keeping the entire payment and needing to set away a portion for the state tax B of the next year may ultimately come down to the tax-free or taxable position. Not optimal when money is already scarce, as the bottom line, verify the state's the most recent regulations to be ready and decide intelligently how to handle your payment for individuals who can be subject to state taxes. One way is to preemptively put aside 5–10% of your income into a different SAV account in order to pay any future liabilities that. Alternatively, you may think about purposefully having some taxes withheld when your payment arrives by filing a special -4 vault form with the IRS. That money would then simply cover your taxes ahead, and you'd receive a refund. This way, you won't be rushing when tax season starts. Perhaps less immediately. Speaking of wise planning, these payments can also present some special financial opportunities for certain beneficiaries, such as eliminating credit card debt or other loans, or paying off high-interest debt with just a fraction of these installments. could eventually save you a significant amount of money on interest by funding retirement funds. Those who are getting close to retirement or who want to increase their savings might want to consider making one-time contributions to tax-advantaged accounts like Roth IRAs. This allows them to invest for growth and extend their time horizon before they need to use their money. The cash. It's important to take some time to think through the best course of action for spending the lump sum payments, as they represent a unique opportunity to significantly improve your overall financial condition. For many recipients, this means simply using the additional money to pay for necessities, and buying supplies of food and medicine will take precedence. The fact that these payments are intended to give the most financially vulnerable people some breathing room is not a cause for shame.